Hi there, good afternoon. You're watching us on Closing Trades on ET Now. I am Snehi Shah. With me is my colleague Harsh Saitan. Harsh, what an unexpected day of moves coming in for the market. I mean, we had largely preempted what the policy would do, but the impact is something none of us had actually foreseen. So if you take a look at what the markets are doing right now, very good move coming in on the Nifty. Nifty Bank also doing very well for itself. Nifty is up 0.7%, simmered down slightly from the day's highest point because remember, at one point of the trading day, we had crossed 24,800. We're slightly off the day's high, but not much to worry about, and definitely nothing to complain about today, given the kind of move we've seen after being in a lull for so many trading sessions. Similar is the move coming in for Nifty Bank, but largely outperforming the benchmark. So 1.2% uptick coming in on Nifty Bank. It's names like Kotak Bank, Axis, ICICI Bank that are all doing very well, trading anywhere between 1.5% and 3%. But Harsh, the broader end of the market also looking quite cheerful today.
Well, yes, surely it's a very similar move on the broader end as well. It's a solid move. When you're looking at the broader market, you've seen 0.5% higher. Of course, the mid-cap index saw a bit of a cool-off and thereafter a bounce back. So a slightly different move in comparison to how the small-cap index as well as the Nifty 50 index have reacted. So in that sense, maybe slightly different. In terms of sectors, and this is where it starts getting interesting, let's pull up all the sectoral indices as they come, except the Nifty PSU Bank. Pretty much all of them sitting in the green is what I see. Let's look at the Nifty Auto Index, around 0.8% higher. Outside of that, while the Nifty IT Index is absolutely flat, it's still clinging on to some bit of green. FMCG is up 0.5%. Media has seen a very, very strong move, around 3% odd. Metals also up around 1/3%. A bit of a cool-off seen on the Nifty PSU Bank after a couple of very strong days that we've seen. So that being the possible only little bit of a shine of pretty much all of the sectors is this one which is standing out. The realty index is up 1% or thereabouts, and you also have the private banking index, which is making a very, very smart move. So all of those are sitting pretty, at least at this point. We'll of course discuss stocks as we go along on this show. But Kunal, what are you making of the move today?
This is exceptional move for the indices. It's to start off with an expiry, and that too at a point when the premise is that we are at a maximum short position from the FII. So I think this could have been a brilliant start, to the series. And this also bodes well because now this would gel in more of short covering across many sectors. So today, one of the prime reasons why the markets are moving up higher is because of the private sector banking names. You look at HDFC Bank, ICICI Bank, Kotak, Axis Bank. I think all four of them are combining, to contribute one of the more higher percentages on the Nifty 50 as well. And of course, a direct impact on the Bank Nifty. Now, this indicates that we are looking at a spree of short covering, which could spread across many sectors gradually. So that I believe could be the telltale sign for the markets going forward. We are back again to that 24,800 mark on the spot levels Nifty. That I believe could be a breakout point because we were discussing this in the morning that if we break past about 24,750 and 800 barrier on the spot levels over the next couple of days, then we could be looking at a turn for the indices. And I think that potentially if we close about this 24,800 mark for the Nifty, this could bode in very well for the index over the very near term.
What do you make of the move on Kotak, Kunal? That 3.5% move really standing out, at least for me. What next? Because this has been a very long period of consolidation for a stock like Kotak.
Correct.
We had a Morgan Stanley come out and talk about a 2,600 target price on the fundamental side. How are you seeing the technicals and the charts?
See, of course, 2,600 is a little bit of a far.
Sure. It's a 12-month target price.
It's a 12-month target price. But what's happened is for Kotak Bank, I think a month or a couple of months prior, there was this negative reaction to the stock price. There was a major gap which was formed into the stock. It's almost like a 150-point gap. 2150 thereabouts to 2025 was the gap for the stock. It's now trying to attempt to fill that gap. So that attempt to fill that gap on the positive side should have a positive effect across all the other stocks which have been languishing behind. We were at a point where ICICI Bank was below its 200 moving average. That stock is making a comeback. So I think all of that should augur very well.
Awesome. So let's go across. Nilesh Jain also joining us, Head Derivatives and Technical Research at Centrum Brokering. Nilesh, first let's take a check with regard to the Nifty Bank, please.
Very good afternoon to you. Good afternoon, everyone. Absolutely. So, what a remarkable recovery that we have witnessed today. The Nifty is making an attempt to cross the barrier of 24,800. We are expecting a move beyond that. And as far as short-term levels are concerned, we expect Nifty to move towards 25,000. That's the immediate target that can be seen in next 2 to 3 trading session. The base has already been formed at 24,600, so that should be the stop loss for the long position. And till time it doesn't break below 24,600, we can expect the pullback move to continue towards 24,900 and 25,000 as well. Now coming to Bank Nifty, which is outperforming not only today, but if you see compared to the Nifty index, we have seen an outperformance in the last 2-3 consecutive session. It has reclaimed its 21 as well as 50-day moving average. So looking at the overall setup, we expect Bank Nifty to outperform the Nifty index in the October series. And immediate basis, the target on the upside could be somewhere around 56,000. And the base has also shifted higher at 54,500. So that should be the stop loss. Overall, we are slightly of the positive view after today's positive development on the back of short covering that we are witnessing today. So buy and decline should be the strategy.
Buy on dips is the strategy. But Nilesh, we've been largely talking about private sector banks. So what is your take on NBFCs? Because take a look at something like Shriram Finance, that's doing so good. LIC Housing Finance, Muthoot Finance, all of these NBFCs, and particularly the housing finance names, they're doing very well for themselves. Anything that you're spotting on the charts here? Any fresh breakouts?
Absolutely. So we have been bullish on NBFC space, housing finance space as well. So overall, this particular sector is looking positive for the October series. And we have already seen a good development and a good rollover data across all these stocks within this particular space. So Shriram Finance, the target on the upside comes somewhere around 665 to 670. We have already seen a spurt of over 5%. So better strategy would be to buy and decline. Stop loss should be placed at 630. And within this space, the stock that we are liking is L&T Finance Holding. So we have given a buy recommendation in this particular counter. It has been one of the outperformer. It has hit a new record high as well today. We are expecting a further momentum to continue towards 265 to 270 on the upside. Stop loss can be placed somewhere around 250.
Okay, that's the other move, big mover in trade today. The Shriram Finance up 5%. Kunal, you have a view?
Yeah, we discussed this in the morning also, that I think when the stock opened up a couple of percentage points higher, that I think 650, 655 could be a near-term target. I think the stock almost has reached those levels, close to 650 mark currently trading. But this is a very big breakout, for the stock. Now we try and compare this with the moves which is happening across the sector. L&T Finance, a stock which is, trading already at a fresh high, broken past about the 250 levels. Then you have Shriram Finance managing to look quite strong today, recovering back after this couple of days of a mild price correction, and that too with a very strong kind of a price volume breakout. Chola Finance, which has been looking very attractive, AB Capital, etc., which has been doing fairly well for themselves. So when you have so many stocks from the pack which are looking quite charged up on the back of some excellent volumes, you are expecting that this could be a very strong trending move for the sector. So for Shriram Finance particularly, from these levels of 645 to 650 range where the stock is trading right now, I think traders could now eye and target maybe closer to 685 to 690 over the very near term.
All right, that's the view on Shriram Finance. Actually, why the stock is up is because there were reports earlier in the day saying Japan's MUFG is looking to buy some stake in the company, and Shriram Finance almost immediately came out with a clarification saying that they're not aware of any such plan. In fact, this looks like a move that has bolstered investor confidence in the stock, because take a look at the move on Shriram Finance, almost a 5% uptick coming in. But while we're talking about banks and NBFCs, Nifty Bank, of course, that index is on an up move in today's trade, where the main constituents like ICICI, HDFC and Kotak, like we were talking about, they're gaining quite steadily. So what are the triggers other than the policy announcements coming in, and why are the analysts bullish on private banking stocks? My colleague Sharad is here with more details on that. Sharad.
Well, the private banks are supporting the markets. They're supporting the Nifty Bank's jump and even Nifty's jump. And of course, the more upside is likely as today's RBI MPC meet was there. And of course, the impact is coming in that there will be a lot of curbs actually coming down when it comes to the overlapping of the business as well. Now, interestingly, HDFC and ICICI Bank, they form more than 50% of the constituents in the banking index as well. Because of this, of course, the private banks are rallying in the trade, and a lot of important announcements have come for the RBI, where overall there is an ease of business of doing coming in for the private banks as well. Now let's look at the key technical levels which you're watching at. It's of course going past the 55,000 mark current levels, and it's above the 50 DMA, 10 DMA, as well as even closer to the 100 DMA levels as well. So technically also we are looking at Nifty Bank at a strong levels as well. And if these sustain in the closing today, we can see some more buying happening. And I do remember, overall, if you look at the reason for the bullishness, there is an impending FI short covering which is expected to happen. And that's what I've been speaking with the Asian FIs, and they have stated that certain positions might be coming on the long side as well. Public sector banks, they largely participated in the recent rally, and today itself we are seeing some profit booking in these counters as well. But overall, the trend remains strong. Going ahead, margin and credit recovery, that's expected to be in a stronger position in the second half of this fiscal, and also growth is expected to bounce back with a reduction of GST cuts. Now this year itself, the entire picture, if you put it, Nifty Bank, that's up almost 8%, but Nifty PSU Bank, that's almost double return investors have already got. That's roughly 14% uptick this year itself. But now let's look at how the private banks, what the analysts are stating, what is the bullishness like, and I've taken the 4 largest banks, and over here we see HDFC Bank is having a 15% return potential, but most of the pick of the pack is ICICI Bank, 23% returns expected in the next 12 months, 12-month target price coming at 1687, while for Kotak Bank and Axis Bank, it's still 15 to 18% of return potential ahead. So of course, a very strong day for the private banks, but will this rally or momentum sustain? That's something what we are looking at when it comes to the technical levels and the FI positioning.
And thank you so much for that, Sharad. That kind of sums it up. And private banks, of course, doing extremely well in trade today. Let's go across. Sun Pharma is the other one, which is upbeat after Pfizer has struck a deal with the US government to cut prices for existing drugs in Medicaid. Srishti joins in with what it means for Sun Pharma in particular.
Well, yes, Sun Pharma is rallying in today's trading session after taking cues from the deal that has been struck between Pfizer as well as the US government, wherein they have actually gone ahead with a 3-year deal wherein Pfizer will cut prices only for the Medicare drugs, wherein the new drugs that will be launched in the US by Pfizer, that will be at a parity with some of the other nations, and no changes for the Medicare and commercial pricing that has been announced. And taking cues from that, Sun Pharma is rallying. The reason being because it definitely removes the pricing overhang on Illumia. That is one of the specialty and a key drug for Sun Pharma, and because of that, the most favored nation risk is now off the table, and that is indeed positive for Sun Pharma. The tariff concerns have already been abated after that White House clarification. So on both the fronts, Sun Pharma news flow is sounding to be quite very good, and on the back of that, we are already seeing a very good surge in this particular counter. And even Citi has come out with a note highlighting all of these factors, and they continue to maintain a buy rating on this particular stock with a target price of 2,180 odd rupees. So that's all about Sun Pharma. Back to you. Taking us through that, so Sun Pharma also seeing some solid gains, more than 2.5% in today's trade. But on that note, we'll slip into a very short break on this edition of Closing Trades and keep the conversation going with our experts, both on the technicals and fundamentals, just on
Asset managers joining us this afternoon. Daljit, a few minutes before we went into break, we spoke about how private banks, or we tried to make a case as to how private banks could be looking attractive over PSUs at this point. Kunal certainly doesn't seem to think so, because we spoke to him about this in the morning. Daljit, what's the view on the fundamentals? Some of these banks have not moved. Today we've seen a bit of a move, especially on the private banking index, now up 2%, so much more than a bit. Are those set of banks looking interesting at this point? Margin pressure likely to wane from Q3?
Hi, good afternoon. Thank you very much for having me on your show. See, we are positive on the BFSI sector, but not very positive on banks per se. Mainly because one, that in last 2 quarters, we've seen that asset qualities, there was pressure in most of the banks. The MFI thing has played out very badly. And then the personal loan, the loans given to the smaller ticket size, 3 lakh, 5 lakh, less than 10 lakh actually had a lot of issues. So we have been keeping cautious stance on that. And on top of that, when the rate cut cycle starts, the yields start to, or NIMs, margin pressure comes. So like this situation is likely to play for next 1 or 2 quarters more. Therefore, we expect that some of this valuation will become even more attractive. And that time probably we will have to see if there is anything on the banks per se to buy. But on the financial services sector, say NBFCs, power financiers, we are positive. We have some exposure already in one or two names there. Because those are structural stories for those particular segments. So that way we are taking a specific segment call rather than overall broad call.
Right, okay, so that's the take on financials. Daljit, hi, good afternoon. Any take on pharma now that we have some clarity from the US in terms of what the tariff composition is going to be like? And since most of our players already have physical presence over there, now we have some more light on how tariffs could impact the pharma space. Are you going to be looking at the pharma space once again on the back of this clarity?
We already have good exposure to pharma, 3-4 names. One or two of them are from US and other regulated market exposure, and a couple of them on India market exposure. Now, we have always kept this view in our mind that this tariff thing will probably not impact too much on the actual fundamentals of our pharma companies, mainly because most of these guys are generic players where they don't make 50% margin, they don't make 25% margin. So it is not possible for them to absorb anything. It has to be, if there is any kind of tax, it has to be passed on to the customer. And there is the dependence of the buyer, US, is so much that if they do insist on putting so much of tax, then they will be the ultimate users. So finally, the net result is that most of these companies will be either able to pass on all the loss that will come, or they will not be impacted at all. So we have always kept that view in mind, and therefore we have been keeping this exposure alive on all of these companies. In fact, the IPM on the Indian part has been slow in last 2-3 months. We've seen that IPM growth has been slightly muted. But there again, after all these floods in many parts of the country, we've seen so much of floods and all. Post these kind of natural calamities, you tend to see anti-infectives and other kinds of, there is a huge surge in the demand for these. So we are expecting that even domestic growth will be good. And on the international side, not too much to worry.
Okay. Kunal, your picks for this afternoon?
So there'll be two buy calls. The first one which I would suggest would be a bond PNB, Punjab National Bank, from the PSU banking lot. And my sense is that the breakout for the PSU banking stocks should see at least one more leg on the upside, because they are very close towards the breakout of their multi-month, multi-quarter resistances. So I sense that the momentum should come back into many of the PSU banking names. So look out for 119 as a target, stoppers to be kept at 109. And the second would be a bond Max Financial Services. I think this is a classical breakout or a turnaround. Just about a couple of days back, the stock was retesting its 50-day moving average. Today, with the price up move, it's now come back towards a swing breakout on the daily charts and then taking support of this 50-day moving average. So would look out for targets in the range of 1660. Would suggest a buy with a stoppers at 1600. Okay.
Nilesh, yours for this afternoon?
So I have two buy recommendation. Both the stocks are looking strong on the technical as well as on derivative front. First of all, L&T Finance Holdings. So we remain constructive on NBFC space, housing finance space from a short-term perspective. So L&T Finance Holding, as I already highlighted, the upside target looks open for 265 to 270, and stop loss should be placed at 249. Another stock that's on the long side, that's Fortis Healthcare. If you see on the derivative front, we have seen close to 8% OI buildup, that too at all-time high. So strong long buildup is happening on derivative front. Technically, we have seen a good breakout today. So momentum looks strong in Fortis as well. And on the upside, the target would be somewhere close to around 1020. That's conservative target, followed by 1050. And the stop loss should be placed at 973.
So seems like financials is the clear favor of the market right now. Both are technical.
Electronics, 11,500 crore IPO opens on the 7th of October for subscription. There's a slew of them which are playing out. My colleague Sajit Mangat caught up with Sanjay Chitkara, who's the Chief Sales Officer, and Atul Khanna, the Chief Accounts Officer at LG Electronics India, to talk about their IPO offerings and the growth roadmap. Listen in.
The GST cut was announced and implemented on 22nd of this month, when the Navratra sales just started. and it's a direct enabler to our business, and it helps us to grow our demand. We have seen a very good spike of demand in the market, and the best encouraging part is this demand is not only for the products where GST has been reduced, but we have seen overall business is doing well, and we are very optimistic that this demand will continue till Diwali and post Diwali also, because there is a strong wedding season.
Just to get some more numbers or some more idea on the kind of demand which is coming in, have you seen some kind of slowdown in the month of September, and that has picked up towards, or August, September, and that has picked up towards the end of September when the GST cut came into effect?
See, festivals are very strong season in India. It's more than the price. The consumer sentiments are very high, and this is the time when consumers plan throughout the year and they buy their appliances. Regarding talking about demand, India is highly under penetrated for our products. If I talk about a microwave oven, just 4% of household have microwave oven in India, and air conditioner just 11%, washing machine 21%. See, so if we talk about other major economies like China and USA, these penetrations are very high, ranging between 80 to 90%. And our products are just basics. I mean, these are no more luxuries, and it is just to make daily life comfortable. And India will remain a very strong consumption economy, and the demand will ever grow. I mean, that's not just a temporary spike. We hope and we firmly believe that this demand will continue.
You are one of the largest consumer company in the offline space, Mr. Khanna. How are you managing the challenges of GST, especially with respect to input tax credit? That's something which the industry is also talking about. As a OEM who is supplying directly to on multiple channels, whether it's modern or traditional or e-commerce, which is whichever channel it is. How is the trade? How are you managing the trade, and what kind of challenges are you facing here?
See, GST rationalization rate cut is a very encouraging step by the Indian government, and this not only gives a boosting demand to the public, where they can easily increase their lifestyle with the rate cut which has been passed on to the consumers. In terms of, as you asked regarding our plan for input tax credit specially, so it is not a much difference. So this spike during this festival season as well as upcoming wedding season post Diwali, it would be neutralized, all input tax credit which will be availed by our partners. So there would not be much impact for any such, though there would be a little impact in the beginning, but over a period of time, a span of say Diwali festival as sales as well as the wedding festival, this would be neutralized. They can offset their input tax credit with their output tax liability.
Should be seen on a broader spectrum, because instead of focusing on such short-term challenges, I think in long term it will increase the demand in India. Moreover, it will give opportunity to do a lot of cross-sale and premium upgrade. See, customer budget was limited, and with this GST cut, now they have opportunity to upgrade their products to a much larger size TV.
That's right. My next question was on that only, actually. Premiumization. You guys have over a period of time gone, moved away from the base models and gone into premium models. Have you seen an upgrade of premiumization coming into play because of the GST rate cut? What I hear like is on TV front, 43-inch becomes the new 32-inch for people because the differential has come down drastically. So are you seeing that kind of premiumization or upgrade which is happening from a consumer's point of view?
Yeah, so we have seen the growth for premium product and large size TVs or large size refrigerators is much better than the smaller sizes. And talking about premium, as per that share report, the India current premium contribution is roughly 17%. And by financial year 2029, it will grow to 25 to 27%. And LG has positioned itself very strongly in the premium zone.
Newest kid on the block, Sanjay Singhania, MD and CEO, and Nikhil Bothra, Executive Director of EPAC Prefab Technologies. We're in conversation with the management to talk about their new listing and what are the plans going ahead. So first of all, many congratulations on your listing today, Sanjay. Talking about your business, you operate in two distinct verticals, PEB and EPS packaging. How do you plan to allocate the IPO proceeds to both the businesses? What is the mix going to look like?
Yeah, good morning. Thank you for having us on the call today. It's a momentous day for us. And for the IPO proceeds, like we are putting in three baskets right now, three buckets. So we are putting about 160 crores in capex, which is going into the prefab division completely. We are not doing any capex as of now in our packaging vertical. And then another 70 crores is going towards the debt repayment, and 70 crores is the GCP, which will be utilized for the IPO expenses as well as for gearing the working capital.
Okay, Sanjay, you've allocated a significant portion of the IPO proceeds to set up a new manufacturing facility in Rajasthan and expand the existing one in Andhra Pradesh. Tell us more about these facilities and what kind of revenue contribution is expected from these over the next 2 to 3 years?
So we are doing a brownfield expansion in our Andhra facility where we are ramping up our structural steel fabrication capacity from 1,33,000 tons to 1,70,000 tons, and we are doing a capex of 102 crores in our Gilot plant to set up a insulated sandwich panel line, and that would ramp up our capacity to 21.1 lakh square meters of sandwich panel. Traditionally, our asset turn has been around 4.5, but it has the ability to go up to 6. So with this 160 crores of revenue, we can expect, with 160 crores of capex, we can expect a revenue of 800 to 1,000 crores addition.
Right, okay, sounding good on that front. But Nikhil, coming to you, you have allocated a part of the IPO proceeds to repay debt. What is your long-term strategy for maintaining a healthy debt-to-equity ratio, especially as you undertake significant capex for expansion? What's the ratio you're targeting?
Right. So, we have been investing, we have been doing capex in the last 3-4 years. Therefore, we have around 50 crores of net debt in our books as of now. So, total debt is around 210 crores. Out of that, net debt is around 50 odd crores. We'll be paying off 70 crores, and balance also we have been paying in this year. So, we are expecting, by the end of this year, we'll be almost net debt, negative or equal. So that's our strategy. We have been always focusing on, not having too much debt on our books, and that will be the strategy in the future as well.
Okay, Sanjay, your operations are currently concentrated in North, Central and West. What is your plan to expand your presence in South, East, if at all there is one, and how do you diversify revenue streams?
Yeah, see, we have 3 facilities at this moment for the prefab and 1 facility for the packaging vertical. For prefab, the 3 facilities are in Uttar Pradesh, which caters to the northern market. We have 1 facility in Rajasthan, which caters to the west. And we have this Andhra facility, which came in January last year. And that facility already has seen 1 round of expansion after just 6 months of inauguration. And we are doing another expansion now with the IPO proceeds. As far as, geography is concerned, we are a pan-India player. We are having a share of almost our revenue, about 30% each from all the 3 north, south and west, and around 10% of our business is coming from the smaller zone of eastern part of India.
Right, and Nikhil, before we let you go, you've experienced negative cash flows from investing activities in the past. Now, as you continue to invest in expansion, what is your plan to improve cash flow from operations?
Yes, so it was 1 year up, like 3 years back when it was, almost negligible cash flows, but thereafter it has been positive for the last couple of years. And, we have been maintaining a good positive cash flows. So we have done a couple of things in terms of maintaining our, inventory levels at the check. We also, are taking care of, our account receivables, account payables. So we are making sure that, the cash flow is positive, and we focus on that a lot.
Okay, so that was the management of EPAC Prefab, the newest kid on the block, Nikhil Bothra as well as Sanjay Singhania. Thank you so much for your time. As we move on, the beginning of the month often marks key financial activities like salary credits, bill payments and planning expenses. But just as we plan for our expenses...
The month of October has typically fared for D Street over the past 10 years. Seasonality favors the bulls as the Nifty advanced in 7 of the last 10 years. What's in store this time? Sharad joins us with more.
Well, a very strong start to the month of October, and of course, we are following the trend, what the history has suggested. The last 10-year average returns, Nifty, Nifty Bank and Nifty Midcap all have performed and have ended in the green. Now, let's look at the numbers, how it actually pans out. For Nifty itself, in the last 7 years itself, 7 of these instances where we have seen October month closing in green. Of course, the average median return that stands at roughly 0.6%. Nifty Bank, the story is same, but this time it's not 7 instances but 8 instances. And also the average median returns that has gone past the 2% mark. Look at the mid-cap index, they have also closed almost 8 times in the green as well. And the question is how the October returns have actually come out over the last 10 odd years. That's coming on the screen. Lots of greens, but a very big downtick coming in 2024 and 2018, and these were aberrations. But largely October month itself is a strong when it comes to the markets overall. Now let's look at the key sectoral points, which is very important to have a look at. Nifty PSU Bank outperformed Nifty 7 times. Average rate of almost 5.6%, and also we know that on Nifty PSU Bank is on a structural uptrend as well, which we saw last month as well. The indices underperforming Nifty. Over there on a relative basis, 2 names come, Nifty FMCG and the Nifty IT Pack. They have actually underperformed at least 7 times, averaging just 1.8%. And right now also, the current situation, especially for IT, the story remains the same. And even the FMCG pack hasn't picked up so much despite the GST cuts coming in. The October seasonality, the stocks which have closed in green at least 7 times over the last 10 years, as reported by Axis Capital. Names on your screen, PFC, TVS Motor, NMDC, Canara Bank, Suzlon Energy and even SBI make it to the list. But let's look at the stocks which have closed in the red. And these numbers, if you look at it, they have closed in red at least for 7 times. Making it to the list are Vodafone Idea, IndusInd Bank, Astral, Bicon as well as Samman Capital.
Okay, well, interesting. Thank you so much for that, Sharad. Also at this hour, joining us, Shrikant Chauhan, Senior VP, Technical Research, Kotak Securities, and Dharmesh Kant, Head, Equity Research at Cholamandalam Securities. Welcome both of you, gentlemen, and thank you so much for joining us this afternoon. Shrikant, let me come to you with regard to the Nifty Bank. I mean, especially the private bank move today. Till yesterday, we were getting support from the PSU banks. Today, it's the private banks entering and leading from the front. What's the sense like, and what's the outlook like on some of the benchmarks?
Yeah. Good afternoon, everyone.
Good afternoon.
So, say like for today's overall setup of the market, we are seeing good amount of support from private banks, and especially HDFC Bank, ICICI Bank, Axis Bank, they did really well. It was completely missing, and maybe because of the RBI policy also, where there was some expectations that governor may cut interest rate this time also, but that has not happened. And because of that, maybe we are seeing good amount of interest in all private banks. So based on the current setup and the way the market has crossed the psychological level of 24,800, we are of the view that the Nifty is heading towards the levels of 25,000. In case if there is any correction close to 24,700, 750, then there we should look for taking long bets in the market. In fact, I'm of the view that we should look for adding even at current levels long positions. with a stop loss close to 24,700 on the downside. Bank Nifty is doing well. And this time the Bank Nifty has made a higher bottom, which is extremely positive, I can say. Yes, it depends upon whether it crosses the level of 56,000 or not. But while looking at its entire setup and the way there is positivity from PSU banks as well as private banks, this time the Bank Nifty should, I think, cross the level of its previous high. So broadly, I'm of the view that the market is going to see some more bullish days in next few days.
Coming in, Dharmesh, do you mirror that view as well? And given the way the markets have performed in the last 10 Octobers, like my colleague Sharad was just highlighting, where do you think the support is going to come now, if at all you believe that this could yet be another year of October being a good month for the markets? Given the kind of sector churn we've seen, where do you think leadership could be seen?
Yeah, good afternoon, everyone. I think the leadership from here on should lie with the financials, particularly the banks. And given the fact that today RBI policy, had there been a rate cut, nothing like it. But having said that, still the policy framework is, very supportive of the entire banking space. For the likes of, say, the loan against shares going from 20 lakhs to 1 crore rupees, or IPO funding going from 10 to 25 lakhs. At the same time, now banks can fund merger and acquisition. So these are broad structural changes where, private sector banks were very aggressive earlier, and public sector banks have also changed their stance, and with new management taking place in most of the public sector banks, I think they are aggressive to take the bet. At the same time, the risk-weighted asset, some cushion out there on the home loans for personal home loans and MSME segment should also overwhelm. The other thing, this rate cut has not come this time around. What this has done, this has given the banks the time to consolidate on their NIMs and focus on more NI growth. So I think structurally it's a very good environment for banks now, which was not, leading from the front. They were stagnating in the range while defense, infra and other counters were picking up. So our sense is now banking and financials will take the lead. And both private and public sector banks are cherry picking can be done there, and they should be leading it from the front. So whether it is 25,000, 25,500, but the sector which will be outperforming in this leg of the run-up will be banks.
Okay, so banks will lead the run-up. Are you also of the same view, Kunal?
Yeah, I think this is a very strong move for the banking index, and banks have been a huge underperformer. So look at it this way, that if the extent of short covering, the numbers which we were discussing this in the morning, that 94% short on the FI on the index futures, if that starts to reverse, then we are looking at a major short covering across major underperforming sectors. And which are the key underperforming sectors? The banking stocks, within bank, the private sector banking names, and then the Nifty IT index, because these are two heavy weighted indices on the Nifty 50 as well. So I think I would probably expect that if this move is, sees a follow through, if we see a follow through up move for the Bank Nifty, even if over the next couple of days, say a pause on Friday and then a continuation move on Monday, that itself would probably encourage a lot of short covering, and that would augur very well for the entire banking and financial services sector. So I think over the next couple of days, we'll get those data points in terms of how the market has seen a follow through in terms of individual stocks. But yeah, this looks to be a very powerful move for the entire banking and financial services.
Okay, so well, the flavor of the market right now clearly is the entire banking and financial space, because our entire panel of experts today are bullish on that, so looking good. But on that note, we slip into a very short break, track the last 30 minutes of trade on the other side. And second, and the bigger announcement coming in, is that the cabinet has approved, they've approved the MSP, the minimum support price for Rabi crops coming in. So that's two big announcements coming in from this cabinet meeting. I just want to get your sense on the kind of move we can expect to see in some of the agri-related stocks. Dharmesh, your view on something like a fertilizer or agrochems, because MSP now announced on Rabi crops. We've had a very healthy monsoon too. Where do you think some of these allied sectors are headed?
Yeah, a bigger positive move for all these allied sectors, particularly the fertilizer pack should be doing well, because once the monsoon has been good, so the moisture content in the soil is very conducive for fertilizer to play its own part. So I think this is a good news as far as few of fertilizer companies are concerned. be it, I mean, the one is from our group companies was Fact and others, GNFC and all can be looked into there. Chambal Fertilizer is also there. But this news at this juncture, to my mind, is a bit of a, you could take it with a pinch of salt because the government has already cut GST rate, direct tax rate cut has also been there, and there's a fiscal burden. And with this DNS allowance hike of 3%, with the subsidy coming in, it can have a fiscal strain. So that can play out negatively on the entire infra spending going forward when the next budget is presented. So it has to be seen how it plays out. But to my mind, I mean, broadly for macroeconomic perspective, from infra growth, which was driving the corporate earnings so far, there would be a bit of a problem with this kind of allowances being given. But as you asked, for the fertilizer pack, it's decent deals.
Okay, what about Pharma, Dharmesh? The move that Lupin has made today looks extremely strong, whereas the opportunity in terms of the news was just $11 million opportunity. Trying to understand and break this down, 4% on a Lupin on the back of that. Does that make sense? And if so, what is the street seeing?
See, Pharma has been all over the places at the lower end of the trajectory because of the news flow surrounding them. And for last few months, there has been will it or will it not be kind of a tariff policy hanging around them. Lupin, I mean, it's a bit of better off than others because the exposure to US market is not that high. But at the same time, our sense is this is going to play out. The tariffs on pharma maybe later, if not sooner. So it's a better avoid structurally for the timing, at least for next couple of quarters, till the time tariff issue between US and India is resolved. If that is there, then one can have a relook at all these companies. Having said that, the numbers of Lupin for the last quarter was excellent set of numbers. They did aggressively well in all the geographies with margins going up at the same time the profitability going up. So this opportunity size may not be that great, but nonetheless they have been doing well from the generic play space and the API plays. So that way fundamentally it looks very valuable. But again, we are staying away from the entire pharma space just till the time this hanging sword is not out of the way.
Okay, Shrikant, do you have a technical view on this one?
On pharma companies, we are specifically bullish.
Okay.
With a view of at least next 3 months. But in the short run, we are going to see volatile activity in the sector. The reason is because most of these stocks have fallen to their extreme important support levels. Valuations are also compelling. Most of these stocks have decent upside based on their fundamental value as well as based on their technical formation. But at the same time, because they have fallen to their extreme levels, it will take some time to show real strength in the market. So for the time being, we are expecting range bound sort of activity. But yes, specifically, we like Lupin Laboratories. We are also bullish on Sequent Scientific. And we are also more like focusing on Apollo Hospitals. So most of the Apollo Hospitals are on our watch list, healthcare related stocks. But in that, Apollo Hospital looks really strong candidate to buy and hold.
Those are some of the preferred stocks coming in on Nifty Pharma from Shrikant. But let's move on to a very interesting topic now. In a landmark development for Indian cricket, we understand United Spirits parents Diageo has put Royal Challengers Bangalore team up for sale. Billionaire Adar Poonawalla has emerged as the leading contender to acquire the entire stake in the franchise. But what does this mean for other IPL franchises? My colleague Sharad is joining us with more details.
Well, IPL runs about 2 to 3 months in a year, but the business of IPL, that runs 24/7, 365. Now, let's see who runs your favorite teams. Mumbai Indians, it's Reliance, it's their arm. They run this setup. Also, CSK, India Cements is actually having this, and this stock itself trades in the unlisted space as well. Now, interesting, the visuals which are being seen, that's also coming in for RCB, winning their maiden IPL. CSK, of course, India Cements we spoke about. Delhi Capitals owned by both groups, GMR as well as JSW Group. And also interestingly, Sunrisers Hyderabad, Sun TV networks own them. And a majority of that comes in the listed space as well. And of course, we are seeing that in the stock reaction today as well. Gujarat Titans, Torrent and PE player CVC have stake, while Lucknow Super Giants recently RPSG had acquired stake in them, and that's on the majority side. Now let's look at how the brand value actually pans out. And as per the reports, IPL's enterprise value for 2025 stands at $18.5 billion. Standalone numbers, that's around $3.9 billion. Now this is very much important because the buzz in the street is there might be value unlocking for United Spirits. Reports suggest that Diageo might exit, and Adar Poonawalla is the front runner for this. Our company would be offloading its entire stake in RCB, deal valued at roughly $2 billion, and this interest is coming in after the first maiden IPL win from RCB. However, company in the exchange filing stated they refuse to comment on the current speculations. Also, interestingly, let's look at what the analysts have to say. At first, we'll take Nuvama's report. They have stated that the valuations are largely in line with what their estimate was, and they believe there's a high probability of sale, which is expected to happen. And if this continues, there would be a pro rata dividend also coming in. For Elara itself, stake sale is positive for the company, and they've hiked their target price also from 1390 to 1500. But there's a bigger delta for Sun TV if this valuation comes in at $2 billion. And this is because the media right itself values, they'll actually go up, and that is 76% premium to the target value earlier which Elara Securities had given. But the cream is for SRH. The valuation mix that actually can jump up to 8,700 to 13,000 crore rupees. And today's trade itself, we are seeing the stock of Sun TV network actually going past the 10% mark in the day's trade. Why? Because of this reason. The IPL teams as a percentage of market cap, United Spirit is at lower levels, single digit. But look at Sun TV network, almost 45% of value comes just from their IPL team. So a lot of value unlocking actually happening for Sunrisers Hyderabad, or we could say Sun TV network stock is up 10% in the day's trade. We did check some unlisted space as well where CSK trades, Chennai Super Kings. Roughly no changes in the prices yet. Of course, the valuations, they come between 900 million to $1 billion. But of course, after RCB's win, there has an increased brand equity for most of the IPL teams as well.
Okay, Sharad, thanks so much for taking us through that very interesting set of data. But yes, Sun TV is up 16.5% as we speak. On that note, we'll slip into a very short break and keep the discussion going on the other side. Passing Shriram Finance too. Kunal, a view on Tata Motors. You've been vocal about this stock, about 6% uptick coming in, very healthy auto sales numbers coming in for September, a beat on both CV and PV. But chartically, do you believe this could be the beginning of a new move for Tata Motors?
Yeah, this is what I think the stock needed for the last, many weeks of underperformance. And there was a point where many of the four-wheeler stocks like Maruti, etc., they had run up, I think, 20-30% higher than Tata Motors. So, and Tata Motors, on the other hand, was down 10%. So, it was almost like a 30% divergence with respect to the other peers. I think this move could probably be a point where the stock starts to cover up the underperformance with respect to the peers. And, the best part about the move today for Tata Motors is that the stock has also come back above its 200-day moving average. So, there are, it's like a double breakout for the stock price. One is reversing the move which had happened for the stock in the last 1 week. And the second, the stock breaking past above its 200-day moving average. I think both of them should augur very well for the stock in the near term. I think now the upside targets for Tata Motors opens up to closer to 750 to 760 over the near term. And if you're looking at a catch-up of the underperformance, say potentially over the next couple of months, then potentially the legs or higher legs, towards 800 to 850 also open up for the stock. So even at current levels, which means net that the stock could be a good buy from a positional play.
Also the record date for Tata Motors, which was announced, and that's the other key positive which is likely unlocking some amount of value in Tata Motors as a stock today, of course, but the record date for the demerger already underway as well. So, well, that's what we have with regard to where Tata Motors is concerned. While we're still on closing trades, let's also have a look at how the Nifty is shaping up. 1% higher on the Nifty as we speak today. Of course, some big gainers. You have the likes of a Tata Motors on the Nifty 50 index doing 5%. You also have some other movers like a Shriram Finance within the financials, which is doing fairly well for itself, Snehi. Within broader markets as well, the the setup doesn't look all that bad. It looks fairly okay, even though there's a slight bit of an underperformance. But specific names, and I want to pull those up. We spoke about a Sun TV, which is up 13.5% in trade. A NetWeb, which is up 12.5%. We've not spoken about a NetWeb much. Let me go across to Shrikant. Shrikant, what about this one? Slew of orders that have come through for a company like NetWeb that has continued to come through, and you're seeing a move like this, 12.5% in a single day.
Yeah, in fact, it is outperforming heavily. It is crossing all its important levels without any major efforts. And the way it has broken its all-time highest level at 3,000, I am of the view that the stock is like very strong, but currently it is far, far away from its important resistance level. I'm going to say support level now. Previously, the resistance was around 3,000. Now it is at 4,000. So in case if there is any correction close to 3,700 or 600, there we should look for taking some long bets. Buying at this rate will be little bit difficult for traders to take any specific position with a tight stop loss. But if there are any investments, then certainly one should hold on to it. Broadly, I am of the view that the stock is heading for at least 4,500 in next few days.
4,500.
Quite the upside coming in on NetWeb Tech. So that's looking good on that front. Kunal, just a couple of minutes left before we need to wind down. Give us a sense of what Friday could look like for our markets. It's been a wonderful Sensex expiry for us today.
Yeah, it's been a brilliant day for the start of the October series. We can hope and expect that the markets could see a follow-through price up move. Now, interestingly, I think banks and financials, I think that's a pocket which one could concentrate on. Short covering across IT space, that's the other sector which I believe one should keep an eye on. So my sense is that large cap names like TCS, Infosys, Tech Mahindra on the large cap IT space, that something which traders could take a maybe a bet on if there is any kind of a major short covering which starts off, say, from Friday onwards. And banking names, especially the private sector banking stocks. And I would actually now believe that Axis Bank could be one of the key candidates of a very strong breakout, something which the stock had shown potential in the last, in the second half of the September series, but I think now it could take off in the October series, breaking past about the previous resistances.
Very interesting. There's also something like a green panel, Kunal, which has done 8.5% in trade today. It's come off the day's highs. But before I come back to you, Dharmesh, what's the take with regard to Tata Motors? That stock is really, really done well. You've got a value unlocking on the cards. Give us a perspective on what you believe the price of the demerged entity would amount to post the demerger.
Oh, I mean, it's one of the cheapest stock in the automobile segment. And if you do the SOTP of both the PV and CV, so we have a target price of 1,100 for both the entities, but subject to everything is functional. So I mean, Tata Motors has been marred with a number of hurdles in the way. Recent being the ransomware attack on it, and the JLR production being stopped. Earlier, it was the tariff saga which was troubling them. But now, since tariff between countries has been settled, so their key markets like China, Europe, and America has been taken care of. So the JLR says post the production commences, it should be business as usual. So just on the basis of, the SOTP valuation, it is around 1,150, and these numbers which came today for the month of September are very encouraging. Yeah, so these are a great set of numbers, particularly for the entry-level segment. So we are bullish on Tata Motors. Only you need to have patience for it.
Okay, well, patience has been the strong suit of Tata Motors investors so far because it's been a testing stock. But Dharmesh, Shrikant, as well as Kunal, thanks so much for your time. With that,